How's it going, everyone? It's Sam. Today we are talking about why the crypto market's going to fall so much more. Well, that's what some people are saying. We're going to talk about that because Jim Cramer just said that. We have some other people betting on that as well, some other institutional investors betting on that. And I want to talk to you about why I don't think that's the case, but I want to show you some of the new data that we just got in from institutional investors. We're going to talk about Ethereum, Bitcoin. We're going to talk about crypto companies as well. I'm excited to be back here with you because I've been gone on vacation for the 4th of July here in the US, and now I'm back. I can make updated content for you. So if you don't mind hitting the like button and subscribe button, I appreciate that. We're also going to talk about Public a little bit further into the video. There's a link to them underneath the video in case you want to check them out now. Now, the crypto market's looking a little bit better. Bitcoin's up at 20,100. You can also see the stock market is moving up as well. We were down pretty significantly, almost 2% down on the NASDAQ to start the day, now up over 1%. Crypto, though, overall has looked really bad over the last couple months. Obviously, we had a lot of red weeks in a row. And here are a couple really interesting, important lines to pay attention to. Obviously, we had the 200-week moving average. A lot of people thought that we would never touch this, but we broke right through it. And then we've just kind of been sitting around it. Obviously, we have to watch that $17,600 support. We also have to watch the 200-week moving average, which is right around 22,400 or 22,500 right now. And also, we just had this trend line that we should be watching as well. This is a couple months out, most likely, where we might break this, but if we can break this, this will also be bullish as well. Now, Jim Cramer just said that crypto really seems to be imploding. It went from 3 trillion to 1 trillion. Why should it stop at 1 trillion? There's no real value there, he says. This is just as of today. And this is still on his website, CNBC, and this is as of June 8, 2022, so less than a month ago. Here's why Jim Cramer invests in crypto. He talks about it as a speculative investment. He said that he wanted to buy an NFT or bid on an NFT for a charity, which back here he says NFT is sold to you. I'm not sure exactly what he means by that, but he says it's an awful asset, either crypto or the NFTs. But here he was buying them or looking to buy them a little while ago. He says that the long-term value in crypto is its timeliness as a decentralized peer-to-peer currency that can be widely adopted over time. He recommends Bitcoin and Ethereum, which have been the largest followings and seem to be the most legitimate. So he is a bit of a hypocrite here, obviously. Maybe his views have changed over the last month, but it sounds like he thinks it's going to continue to fall, which is why I was talking about how it's going to fall down a lot more. At least that's what Jim Cramer thinks. Now, I don't think that, but there are some other institutional investors that think that as well. Now, the reason I say that is because we just got the digital asset funds flow report. This is where we see what institutional investors are doing, and you can see there's a change. There's actually an inflow of about $64 million last week as opposed to 430 or 440 million flowing out the week before. But this is kind of a lie as well. This is misleading. I've seen some people cover this on YouTube, and I was really surprised because it looks like they really just looked at this graph and didn't look at anything else, because the majority of the money flowing in here are into short Bitcoin investment products. So even right now, even though we have inflows, it's really betting against crypto. You can see that down here. We have short Bitcoin, 51.4 million. We do have some going into Bitcoin, Ethereum, multi-asset, but not very much. The short Bitcoin accounted for about 80% of inflows. This is coming after the worst month that we've ever seen. June 2022 was negative 40%, at least on this graph, I should say. Maybe early days we had bigger swings, we probably did, but from 2013 to now, we have not seen a bigger swing in 1 month to the downside. This is the worst half of the year since 1970 for the S&P 500. Terrible start to the year. And some people are still betting against Bitcoin. We have crypto miners also having to sell right now just because Bitcoin's fallen down. They have debts to repay. Core Scientific came out and said that they sold about 7,200 Bitcoin, the majority of their Bitcoin, for 167 million in June. And this obviously is just putting a lot of sell pressure on Bitcoin. We've seen that miners capitulating. They have to sell, they have to pay for their facilities, for their electric, for their employees, for bonuses and all that kind of thing. And we have some companies really being hurt. We covered that maybe it was last week, right, with the miner that isn't even paying their electric bill. This is kind of a self-fulfilling prophecy, or kind of just kind of like a snowball effect, where if people are worried that Bitcoin's going to fall down in price, they might want to sell just because they need to pay for goods and services. But that makes the price go down even further, and that causes other people to think the same thing. It's kind of like liquidations as well. With liquidations, right, someone gets liquidated and then it pushes the price down, which causes another person and another person and another person, and it can kind of just stack on itself, which is a very dangerous thing. Now, that's also kind of the problem that we're seeing with some of these crypto companies as well. Some of them might not really have a problem, they just don't have a lot of liquidity. But then people get worried, they take out their crypto, and then more people take out their crypto because other people are taking out their crypto. And it's just a self-fulfilling prophecy as well, or a snowball effect as well there, where it really does cause the company to run out of liquidity quite quickly. Now, with that in mind, we are going to get to some of the exchanges and some other top crypto news, and we are going to talk about Ethereum, but I do want to thank Public for a moment for sponsoring this video. Public is an investing app that helps people be better investors. On Public, members can build a portfolio with any fractional asset from stocks, ETFs, and crypto to soon NFTs, art, and collectibles. Public makes investing super easy and convenient. Let me show you how. Alongside the thousands of stocks and ETFs on the platform, they also have over 30 cryptos. They have some of the most popular cryptos like Bitcoin, Ethereum, and Cardano, and are always adding new cryptos to the platform. For example, they recently added ApeCoin. One of my favorite things about Public is the amount of educational content on the platform. For instance, they provide custom tailored content to my crypto portfolio. They also have town halls where community members can ask business leaders questions directly and watch them answer questions live in the app. Also, with their community and social feature, I can share ideas and chat with over 3 million investors, creators, and analysts on Public. You can join me in the community to see what market trends I'm following. They also have great customer support, so if you have any questions, comments, or need assistance, you're able to connect quickly and easily with real people in the app. So honestly, it's just a really great app. It's free to download. They've got a simple and easy to use interface, and they allow fractional investing. And as a thank you for signing up with the link underneath the video, they want to invest in you by giving you a free stock worth all the way up to $1,000 just by signing up and making your first deposit. So if you want to learn more about investing, build your portfolio, invest in stocks, funds, and cryptocurrencies, and claim your free stock, all you need to do is click the link in the description, and that also gives you your free stock disclosure. Thanks so much, and now let's get back to the video. Now, Ethereum is facing strong resistance at 1100, according to Into the Block. Based on Ethereum blockchain data, 7.1 million Ethereum was previously acquired at this price, potentially causing downward pressure from addresses looking to break even. So you can see that's a significant amount, right? That's about $8 billion worth of Ethereum. Compare that to the overall market cap, right? 134 billion. That's about 6% or so of Ethereum's market cap has been bought right around this price. Now, I don't think that we're actually facing a significant resistance here. I don't know why they say that. We've seen it once bounce off of that, but really it seems like about 1200 to 1300 is really where we're seeing some resistance now over the last week or so. Now, that still is a significant amount of Ethereum, but not everyone is selling it at this point either, right? A lot of people have seen that the market has fallen a significant amount and aren't looking to sell. And I think that's something that we have to remember too, right? Cramer is talking about how we could fall much further. We have institutional investors also betting that we're going to fall further with the short Bitcoin ETF. But we have to remember that this has been one of the worst times in history, right? It's not something that you want to forget. Usually it's a good time to be buying during times like this because there have been so many cascading problems that have really caused us to fall this much in price. From inflation, the Fed, war in Russia and Ukraine, Luna, Celsius, 3 Arrows Capital, Contagion with all these other crypto companies, so many people being worried, right? Whether it's Crypto.com limiting withdrawals, fears of Kucoin limiting withdrawals, BlockFi, like I said, Celsius, Voyager, all of these companies are going through difficult times right now, and there's just so much contagion out there. We also have regulation in the future, worries about USDT with hedge funds and with other large investors trying to short it. We have recession fears, housing fears, stocks collapsing, layoffs in crypto and in the general market, especially with a long-term outlook. I don't want to be trying to short or sell when we're at the lowest point that we've seen in a very long time. It's not like we had a couple great months before June, right? We fell 17%. And that was after we fell 18%, and that was after we fell 7%. Now, we did go up a bit after that, 12%, and then 5%, but then 17% down, 15% down, 40% down. So I'm not looking to sell anytime soon. I'm buying right now. Now, moving on, we do have crypto lender Vault now in talks to be bought after withdrawals halt. So another crypto company that I didn't even talk about. This happened, I believe, over the last few days when I was on vacation. But they are talking to Nexo. Now, Nexo sounds like they're in a pretty good position as well. I've talked about FTX and BlockFi seeming like, or not BlockFi, FTX and Binance seeming like they were in good positions, but now Nexo also seems like they're in a good position if they're looking to acquire other assets. As long as they don't get too aggressive, this could be great for their company. And then we have crypto exchange Bullish cutting jobs. They cut about 10% of their workforce. This is very similar to a lot of the other crypto companies. And then Celsius is continuously paying down their loan. This is really interesting. I want to hear your thoughts on this underneath the video. Why are they trying to do this? You can see that they have been paying down their loan though. Now their liquidation price is about $5,000 per Bitcoin, actually just below. So I would be surprised if we got there. I know some people will say crypto is going to zero, but I'd be very surprised if we ever got to that point. They are still giving out rewards even though people aren't able to withdraw because of the liquidity issues. Now, overall, like I said, the crypto market's looking a little bit better here today. I mean, we've been pretty much just floating around 18 to 21,000 Bitcoin per Bitcoin for the last week or so after a really difficult time last week. And Ethereum right around the same price as well. If we look down the list, there isn't too much fluctuation in prices. A lot of these cryptos right around the same price that they've been. I think what's really going to happen is we're going to have to push past a lot of the greater issues that we're facing here in the US and the world as well, with inflation, recession, war, that kind of thing. After we get past that, I think risk assets will have another big boom. But when that is, it's hard to tell. That's why I am dollar cost averaging. Let me know your thoughts on this underneath the video. And part of the reason I talked about public earlier is because I am adding not just to crypto, but also to my stock positions, adding a lot to my Amazon position, Tesla position, Google position, VOO as well. I think these will be great companies over the coming years. But let me know your thoughts on that underneath the video as well. Definitely check out the link to public, and I'll see you in the next one. Bye.